Testing 1 2 3. Can you guys hear me? Anyone in the chat can confirm that you can see the screen clearly. You can hear me clearly. I'll just wait for someone to confirm that you can see the screen and you can hear me. You can type that out in the chat. Anyone there? I'm not sure if I'm talking to myself here. I can see there are concurrent viewers. I just need to confirm that you guys can see me. Or see what I'm doing on screen at least. Yo, what's up, Joash? Yeah, can you see what's happening on the screen? Maybe a slide, you can hear me. Okay, cool. Thank you, Carlo. Thank you, Joash. I'll give it about 1 or 2 minutes more for a few guys to pop in, and then we'll start. But this will be automatically recorded and posted to my YouTube channel once it's complete. I'm going to try and keep it short and sweet. We're basically going to cover the open, high, low, close indicator from Joshua, the session Statmap, and there is one more that he's included, which is called the volatility indicator. Some of you may already be familiar with all of these. Any questions you have, just post them in the chat. Since there is a delay, I may take a minute or so to answer them, but please do post them in the chat when you can. Right, I think we gave that enough time, 2 minutes overdue, and we're already 4 minutes into the session. So basically what this live is about is to introduce you to the open, high, low, close Statmap and the session Statmap from Joshua and 2 Degrees, and how I use them and how having a statistical edge could improve your trading. So what does that mean, having a statistical edge? Basically, what we're trying to do, or what these indicators do, is if you use specifically, let's say, the open, high, low, close indicator right here, the open, high, low, close stat map. It gives you options to choose a specific time frame. Good evening, MD. It gives you the option to choose 5 different time frames concurrently, and for each of these time frames what it would plot using past data. And I know on a daily chart this has a look back function of about 50 years, right? So what it means is that it is using a shit ton of data from the past to give you a statistical give me 1 second, I'm just going to make this solid really quickly so you guys can see all of the levels. So what that means is it's giving you based on an open, right? In this case it's the daily open. Under these settings I've set it to a daily open. You could set it to a weekly open, it would give you weekly levels. Monthly open, it give you monthly levels. Hourly opens, it would give you hourly levels. And what that does is you have a little box down here and it tells you how far back in terms of daily sessions this has looked back to spit out the statistical manipulation, M levels, and statistical distribution levels away from the open, above manipulation and distribution, and below manipulation and distribution. Does that make sense? It uses past data to give you sort of an average over the last X amount of sessions, however many sessions that it looks back, to give you a statistical advantage in terms of if you were bullish on this particular day. I personally would look for price to trade down to an M level, manipulation level, and trade away either to an M level or a D level. So now that you have an idea of how big the daily range can be, you don't get caught up closing trades too early, doing all sorts of silly shit, right? Do you think this is something that could offer you an advantage? When we talk about statistics itself, right? There are many indicators at the moment that I'm looking through and currently using that offer these statistical advantages. There are even websites like Edgeful which would give you statistical data in terms of you could put in any range, anything you want in there, right? For example, I could go in and try to look for data for a specific time period and what the percentage probability would be of trading back to midnight New York. If you're an ICT trader, that would be the line in the sand, midnight New York. Or if you're a futures trader, you would look for statistical advantages in terms of what is the percentage probability of trading towards the RTH gap, 25%, 50%, 75%, and 100% of the gap. You could ask me that in a DM, MD, right? About which ones are free. They don't do such a fantastical job. In fact, the only free one that I know would basically tell you percentage probabilities of trading to midnight New York and a percentage probability of filling an RTH gap, right? So what that basically means is that if you were on regular trading hours and here is your regular trading hours gap right here. Imagine after open, right, today or Monday in this particular case, that it told you there was only a 30% chance of trading back to this gap, either completely, 50%, 75%, 25% of completely filling this gap, right? If you had that kind of statistic on your side, then you'd be less bullish in terms of looking for price to move up to fill that gap in particular. Or we could say this level was midnight New York, and you would, based on past data of these indicators, use that information to decide whether price has a good enough advantage of trading back to midnight New York. So let's say that opportunity or percentage was 70%, right? Let's say it was 70%. Well, that basically means that 7 out of 10 times, for example, price would trade back to midnight New York. That means it is 70% in your favor to take that trade and only 30% against you. So does it make sense, or do you guys understand how these, or using these tools or information, give traders a statistical edge? Now, open, high, low, close Statmap is a static indicator in the sense that when you put the time frame into this indicator, whether it's daily, 12 hourly, 4 hourly, hourly, whatever it is, if I had this on an hourly instead of a daily, well, then it would give me the expectancy from the open of how big this hourly range in particular, let's call it is this a 5 minute, right? This hourly range could be in terms of manipulation and distribution levels above and below. So when you have this sort of visual reference, you know that this hourly could possibly cap at a D level. What's up, 2 degrees? The man himself. This hourly could cap at a D level or an M level and reverse and move towards an M level or a D level. Right? That's basically what these statistics are telling you. Now, I personally don't use it on hourly. I'm not saying that you should use it on an hour, only a daily. I use it on a daily because it gives me an overview of how large this range could possibly get from the open. And if I know how large this range could get, well, then I'm looking for trades to form or entry models to form around an open or an M or a D level. Ideally, I'm not looking for anything in between these levels. I'm looking for these entries to form around the open, M or D level. So this is the open, high, low, close stat map. And the session stat map is slightly different. What this does in particular is you could input custom ranges, like standard this comes with a PM session, 8:30 to 11 AM session, and 2 to 5 London kill zone. So if you had these on, or this on, you would then it would then give you statistical probabilities of those particular sessions, right? We'll just put them all on here so you guys can have a look. Here. Here's an open of a particular session right here. Trades down to an M level. You can see it here. I don't know if I need to zoom in a bit. Right there. Right. Trades down. Let me put this back onto ETH quickly. Here's one here, right? Let's start here. 2 o'clock, London kill zone. With the session stat map, we've got the range identified as 2 to 5 AM as a London kill zone. Now I'm going to introduce you to how these ranges work, but I'm not going to tell you right now which ranges to use, because once you start to get deeper into this, you are going to find that there are going to be particular ranges or times that are going to work much better than other times. You could use London kill zone, you could use an Asian range, you could use New York AM range, New York PM range, you could use an hourly range if you wanted. You could use any ARB figure in terms of time, and it would spit out the M and D levels above and below the open price. So here London kill zone opens. We have an M level, right? Now remember, if you're bullish on this particular day or at this particular time, you are looking for price to manipulate AMD vibes, manipulate from open to an M level or a D level. If you're bullish, ideally M level. And you are looking for an entry model to form. If you followed me long enough, entry model shouldn't be an issue for you, right? We have the flash model. Series of down candles form, we close above it, retracement to 50%, CSD here, we go long. Where do we go to? We would trade that to the statistical M level or D level within that time. You move on to the next session, price opens up, we have an OLR, opposing liquidity run, a turtle soup, Judas run, whatever you guys want to call it, or manipulation swing at the open. There's 930 right here. We swing, where do we go to? M level. CSD. Your job would be to go to the appropriate time frame. What do the times mean below the indicator, right? So the times that you see here are statistical times that it expects the manipulation or distribution to occur. How about that? So besides giving you the actual levels, these indicators are giving you, based on prior or previous data, what times you could expect these manipulation or distribution levels to occur. Let's look at this particular one right here. We hit an M level. I'm going to make this solid as well right now, and the time, just so you guys can have an idea. Right, here's your time level. It says 941. This is an M5 candle. It expected the low or the M level to form at 941. Magic, right? So besides giving you the actual manipulation and distribution levels above and below price, it is also giving you the time. These indicators also have an alert function to alert you when an MOD level is hit. You could add alerts on the session stat map for an M level, a D level, and when those alerts go off, you get to your computer, you look for the setup, you take the trade. So the difference between the open, high, low, close stat map as opposed to the session stat map, the session stat map, we would use ranges, unlimited amount of ranges, any range or time that you could think of, right? It could be something you saw somewhere, something you know personally, something you know that works. And I'm going to show you another indicator, right? I'm just going to mention it. I'm not going to show you the actual indicator. And I'm going to show you how I use the session stat map together with this indicator, right? But I need you to understand the differences now between the open, high, low, close stat map, which works on static times, minute, hours, daily, weekly, monthly. It would give you all of those levels. It would give you all of those levels as you put them in, right? You could put in a monthly or weekly level if you wanted. click on that. Let's just take the daily out for now, pop it on, and what it would do for you is simple. It gives you the weekly open, right? Let's get rid of this. It gives you the weekly open right here, the weekly manipulation level. Let's just go here, the weekly manipulation level, the weekly distribution level below the open, the weekly manipulation above the open, the weekly distribution above the open. Now look at the amount of real estate you are dealing with if you are a scalp trader, or sorry, a swing trader. From the open to manipulation below, 165 handles. From manipulation, if you had found an entry like I did, to the open or to the weekly manipulation level, 400 handles. Is that interesting? Not interesting? Uninterested for you guys? That is the open, high, low, close stat map using specific time frames. And again, the session stat map would use specific ranges that you input into here, whatever those ranges may be. It could be as little as, understanding the data is crucial. Anyone missing this hasn't tested. Correct. So we are not selling, well, 2 Degrees isn't selling a holy grail of trading, right? He is, or they are offering statistical advantages or edges based on previous or past data, which the indicator is doing all the heavy lifting for and spitting out these levels for you based on the time frames or the inputs that you make. What's up, Joshua? Right, so now that we understand the differences between the open, high, low, close stat map and the session stat map, once you start to figure out your own times, what's up, Joshua? What's up? Once you start to figure out your own times, right? There are other indicators out there like Prism, which offer you statistical probabilities of certain levels, highs, lows, equilibrium, opens and close being hit. Once you understand that, and I'm going to show you how we can input how I input those particular ranges based on another indicator which offers probabilities, but I overlay the session stat map on each of these ranges right? I input the time of these ranges as per that indicator, and then I'm looking for, and this is an Asian range, this is a New York range, this is a pre-New York range, and this is a New York PM range. Now you can see here, and I'll show you an example from yesterday which I posted inside my Discord, right? As to why I expected certain things to occur. And let's go here. And I based it on an M1. Yesterday I posted inside my Discord that based on a past experience, right, or screen time, that, and I think I posted this on Twitter as well, right, that my max expectation for any retracement at this particular time, so if I had gone to this time right here, when this session had started, I get a bird's eye view of how large this range could possibly get from the open. I know this could be the lowest, and this could be the highest, right? That's how I see it simplistically, or how I'm using it. Joshua and 2 degrees maybe get more technical, but for me, it's simply that, right? Right, so let's look at this one. If you've found the ranges that work for you and you've tested them out, then you become more confident in taking a trade. In this particular day, yesterday, I based my idea for going long to take this high out as a max expectation retracement, and I rounded it off to about 2160, right? Somewhere here. The actual figure is 2164-ish or so, right there. Because it is based on the distribution level below the open of this current range that I've chosen. Fast forward, price tags the open. You're going to see this very often, that when you have a range that works, you will have an open. Price will run one-sided above it inefficiently, come back to it, create efficiency, run below it, create more inefficiency, run back to it, which is the open, and rebalance any inefficiency that was created on this move down, right? It's a loop. It closes the loop. Afterwards, you have any up candles forming. CSD of those up candles, you get bearish. We are looking for our long setup to form at a M or a D level, right? Here we go, right there. We tag this D level out of time of this range, right? But I've seen this happen many a time, that these levels still get tagged outside of the time. And your setup would then form inside here. Whatever that setup may be, if you're following me or have been following me, using the closing of any FEGs as market structure shift, order blocks forming inside these FEGs become higher probability order blocks. Your long setup would be forming inside here, and your trade would be looking to take out this particular high and finally trading to this D level, right? Let's take a look. There's your setup formed inside the IFEG, and we're looking delayed delivery from distortion, correct? Delayed delivery. There's the M level. There we go. Let's pause it right there for a second. There's the D level. Now, this is not going to show you how to enter. Those, I have previous videos based on which models to use, how to use. The simplest one is based on an FEG in a stop hunt leg getting closed through, down candles forming inside that FEG or IFEG now, right? The moment you get a CSD of any down candle, you could treat this entire series as an order block, and you would look for retracement back into this order block range right here. For this particular one, we would long at the opening price, stop below the order block low, even though it's still inside the IFEG, and we are targeting the M level or the D level right there. I've been using it for Zen. I've been using it for like 2 months now, like probably when it came out. I waited, I tested it out for a couple of, well, not tested, I monitored Joshua's daily posting on Twitter, and I was astonished at all of the M and D levels being hit, right? Now, this is a paid indicator, guys. I'm not offering anything for free here. This is a paid indicator. I myself pay for this indicator because I understand the advantage that it gives me personally. Having said that, I will post a link to the indicator, and I will, anyone that DMs me, or I will put inside the comment section or the detail section here a discount code for my community only, which would give you a 20% off this indicator, which comes with the open, high, low, close stat map, the session stat map, and the volatility indicator. So this is not a holy grail. It's not going to enter the trades for you, but what it is actually doing for you, and like I've shown you now, if you have levels or ranges that you have figured out on your own, taught to you by some mentor, whatever it is, right? This is going to give you statistical data, and in terms of a bird's eye view, delayed delivery and flash model. You know, the flash model, and I've done it countless times, and the model of CSD is unbeatable, right? Now, if you saw my post yesterday, right? If you saw my post yesterday, you would see that I entered right here, all the way down here. Why? It was, I expected the previous daily low to get taken. Let's just take a look at that really quickly. Let's just take a look at that quickly. When this candle, which is Monday's candle, right? When Monday's candle tagged this high right here of Friday and failed to close above it, its low automatically for me becomes an algorithmic draw. So I'm going to put this in red. This is my next day's objective or draw on liquidity. Let's go back down here now. Here's that level right here. When we pair that with, and let's do this, right? Speed this up a bit. Right. You would see that the setup formed at a previous D level in London, and it was a no-brainer, right? It was a no-brainer. We tagged the previous daily low, we accumulated inside here, the setup formed, and off it went, right? Tagged the previous daily level, it was gone. Now, when you have that kind of data on your side, what more do you need? All you need is your entry model. And I've taught that countless times, right? I've taught the entry model an incredible amount of times. Whether you catch these at the low, based on aggressive CSD, flash entry models, whatever it is, right? If it's models you want to learn, my Discord is wide open. I can show you exactly what models look like, right? And when you have these models in mind, you would be able to take those trades together with the open, high, low, close stat map and the open, high, low, close, right? When you truly understand how these models work, you would be able to take trades like this. Order block, below the order block, right? $7 stop, and you would be targeting statistical highs or lows like this. For me, it was this one. Right, so, but this is not an entry model class. The entry model, you decide how you want to work that out. What I'm trying to tell you or show you is that we can get a bird's eye view of how large a range can get, and we can take advantage afterward in terms of entering. Here's one here today in London. Delayed delivery, hits a D level. You come in down here. All you're looking for is IFEGs or stop runs inside this leg. Here's an IFEG getting closed. Here's an order block that formed inside these IFEG. Here's 50% of that order block. Stop below the low of that order block. Target the highs. You see what I'm getting at? We are using M and D levels and a bias that we have preformed for the day. And you're going to see this often. Find the right range, find the right time frame. You're going to see D levels with delayed delivery being hit here. There's an open of this particular range, a manipulation and distribution above and below. There's an M level right here. Right here. It's not random that these things occur. The way I look at it is that you want your M or a D level to be paired with two things. Those two things would be an order block, or it would be a high or a low or liquidity pool. In this case, here's an M level. What do you see to the left? Just look to the left. That's all you need to do. Look to the left, right there. Here's a flash range or propulsion block continuation range. This is not random that it hits 50% here. No body closures. CRT unlocked, you don't need premium trading view. You don't need premium trading view. In fact, I downgraded my trading view from premium to like the middle package just because I didn't want to play around on sub 1 minute time frames anymore, right? You get to a point where you evolve or go past those things, and I didn't feel it was of any benefit to me to play around sub 1 minute, but it doesn't take away from the indicator either. So this is what I meant, or what I was getting at when I told you guys your trading, or the future of your trading, is going to rely heavily or favor you heavily once you find a statistical edge, whatever that edge may be. Where you find it, how you find it, would be up to you, but your trading is going to be favored when you do find that edge, like I've done here, like I've shown you here on the open, high, low, close stat map and the session stat map, right? You find the edge and you play towards it. These are not random. In fact, I think they are pre-programmed into the algorithm that when you find an open and it trades to an M or D level, the price would either trade back to the open. Look at this, not random. Now I'm going to show you one more here. I use it on a slightly higher time frame, but you're going to get an idea of what I'm talking about. This is a different range based on different opens, different closes, whatever it is, right? I want you to look at we'll use it on a 5 minute just so we can get an idea of bird's eye view. You can see that there's an open right here. Where do we trade up to? an M level. We tag the open before we do that. We trade to an M level. You find your entry inside here. Where do we trade down to? D level. Right there. So your job is to either find the ranges that would work for you the way I have done or found my own ranges. Right? There's an open. Play around the open. Tag an M. Tag a D. Here's an open. Come down here. There's the 2160 I spoke about yesterday. What do you see to the left? An order block. So it's either going to be an order block or a low or high that you're looking for to the left. Where does it trade to? M level up here. Today's level. Here's the open. Where does it trade to? Manipulation level. Distribution level. Not random. This open right here. We trade down to an M level. Tag the open again. From the open, we could go either way, right? We could, if you're more bullish, you'd look for the M and the D above it. If you're bearish, you'd be looking for this to trade all the way back down here. Does this make sense? I'm going to show you, just so you have an idea visually of what I'm talking about, right? These are other indicators, but let's take this one for example, right? This is what having a statistical edge truly means. When you put or have your inputs into these indicators like so, they will give you percentage probabilities of trading back to midnight New York or filling an RTH gap, right? For a specific time period or period of time, right? That you input. And when you have these working, you see here that this particular one gave you a 74.4% probability of filling the tiny regular trading hours gap right here. So this is what a statistical edge is, using data, however it may come, or however you find it, whether you find it for yourself using things like Edgeful, or you physically track the data yourself, or what we are talking about specifically here is using using the open, high, low, close stat map and the session stat map to give you a bird's eye view of how large a range can be. And if you had that kind of information, like what would you do if you knew where price is most likely headed towards? What would you do if you knew where price is most likely to reverse from? These are the questions that you have to ask yourself when using these indicators. Would you go all in? Would you load up your contracts, lessen your contracts? These levels that these two indicators spit out, in my opinion, are unparalleled or unmatched. So it's not just, you know, someone looking at a tweet from Joshua or 2 degrees showing a chart with an M or a D level doesn't do this indicator any justice, because when you delve into the indicator itself and you figure out that when you pair M levels and D levels, M level or D levels, with either lows to the left or an order block to the left, it's like you can't lose. And that's true. These things become more powerful when you test them for yourself. All I am doing now is, and I haven't even given you any ranges, right? I've shown you what having a range can do. So again, personally, because of the things that I am doing, I'm looking less at the open, high, low, close stat map, but that's not to take away from that indicator. It's very powerful. If you just use the open, high, low, close stat map on its own based on a daily, I think this would be all that you would need, right? There's your open, there's a manipulation and a distribution level. I don't think you would need, oh sorry, there's your open right here, daily open. There's your M level, your setup formed around an M level. There's your M level, look to the left, what do you see? Here's an order block range right here. Let's get this a bit neater. 50% entry forming, you're going to trade it back to the open, back to an M level, or ultimately to a D level. So it's not just something spitting out random levels that are just random at that, right? These are not random levels. These are calculated, and on a daily it can go back 50 years worth of data. It's telling you that over an X amount, in this case 60 daily sessions, that the statistical manipulation and distribution levels are this much above and below the open price. If you had a particular bias, like I'm going to say it again, and it's going to sound like I'm a broken tape recorder or a parrot, that when you dive into this indicator deeply or deeper than just using it as face value, this is an M level, this is the open, so what do I do around this M level? No, dive deeper into this. Pair M levels with liquidity pools or order blocks to the left and trade to open or M or D levels. This is not small money in terms of the amount you can take. Just trading back to the open, 77 handles. You hold a trade here, 140. You held it higher, 289. Most people trading futures do not need that many handles, believe me. 40 to 50 max is a good day. So this is, in my opinion, a literal ATM, but this video was long overdue, and I held back until I personally dove as deep as I did, and I haven't even shown you more, right? I've shown you an idea or given you a vague idea of using ranges. I didn't show you exactly what ranges I used because that's reserved for my personal Discord. But you have an idea of how powerful these can be once you start to implement them, either the open, high, low, close stat map or the session stat map. It's as if you can't miss. Right, so I think the detail for the discount code as well as the link to the indicator itself will be posted in the detail section. You head on over to joshu.trade, and once you purchase the indicator, it is a monthly subscription. You will be directed to a WAP page where you will have to claim access to the indicator in order to get access on your TradingView using your TradingView username. Will give you automatic access to 3 indicators. Right, it'll give you access to the open, high, low, close stat map. It will give you access to the session stat map, and then the newly added, which I'm still trying to get my head around, but the statistical volatility indicator right here is basically giving you based on a heat map or a bar chart if you chose, the statistical times that volatility is expected in the market. You see, the darker times means more volatility, the lighter times means less volatility. So you're getting a complete package inside here. And again, the discount code that you do use is available for all of 2 degrees indicators, right? It's 20% off in perpetuity, meaning for the rest of your life or as long as you pay for this indicator. Two Degrees was kind enough to, well, after a lot of background checking, give us that discount code for my community only. You would not have seen me post that discount code on social media, right? Because we're not here to flood the market with these things. But if you, when you do get this indicator, know that there is a discount code. It will be in the detailed description of this live once I stop, as well as the link to Joshu's site to get access. Stat volatility. This is how someone can learn new assets they're not used to and understand statistical volatility king zones. Yeah. Right. So any more questions? This went on longer than I anticipated, but I think I went in a bit deeper than ordinarily I would have in terms of explaining how I personally use the Statmap, session Statmap, for my personal trading. And thanks to 2 Degrees and Joshu for showing up. I think I saw Josh, probably saw Josh somewhere in here, I'm not sure. Right, so this will be available, like I said, it will be available on YouTube for any of you that want to re-watch it, and all of the details will be posted in the description below. Gokul, you could try it for yourself, brother. You could try it for yourself. You could input that into the indicator. There's 9:30 to 10:30, for example, right? Put it into the indicator and it would spit out the open. Now, how interesting is this? That for the 9:30 to 10:30 range that we just input, solid, that price opens at 9:30, goes down to a manipulation, and then just F's off afterwards. Crazy. Been using it for about 2 months. Indicator is worth it. Yeah, indicator is definitely worth it. I'm not, like I said, I don't get a discount on this indicator. I'm not using it for free. I am personally paying for this indicator out of my own pocket. So, yeah. Yeah, thanks for joining 2 Degrees. Jerry Phillips, no, you don't need a premium or pro. I think the normal, I will just confirm with Joshua, but obviously the better the trading view plan, the more data you get back. I think there is a Discord or 4 indicator members. You could check on that, Harman. Let me see if I can pull up something really quickly. Right, so this would be the site. Just give me a second. Right, so this would be the site. You get your access. These are the plans. Whoops, give me a second. Get access. These are the plans over here: monthly plan, quarterly plan, and a yearly plan. And remember, with my discount code, you are getting 20% off these prices. So once you choose a plan, it would take you to, and pay for that plan, it would take you to WOP, and you can claim your access on that. Just before I end the stream, I think I'm going to put that code right here. So the code itself is all caps. Whoops. This is the code right there. That's all that you need to use to get that 20% off. All right, that's it. Thank you for your time. I appreciate it. I appreciate all of you that have joined. Hopefully most of you have learned or gained some knowledge from this. And Joshua and 2 Degrees are doing a really, really great job. Yeah, and for more details or getting deeper into entry models and actual trading models and how I use these the session stat map, you could join my Discord, and those details are in the description as well. Right, thank you so much, guys. Have a lovely evening.